Okay, email here from Andy in Halliburton. Hewlett-Packard is the topic. What do you think of Hewlett-Packard? I'd like to buy it, but should I wait for a pullback? Goldman Sachs basically admitting that they kind of got it wrong. They underestimated the turnaround. They upgraded the stock today. They like the cost savings that they're wringing out of the company.
Right. Meg Whitman's doing a great job. So one of the core themes in this market right now is old tech. So what is it the market likes right now? It likes cash flow generation, it likes predictability, it likes a strong balance sheet. It's not necessarily looking for rocket fuel. The 62-year-old baby boomer is looking for predictability and a better return than they're getting on the fixed income side. If you look at Hewlett-Packard, if you look at Microsoft, these are companies that have great balance sheets with very strong free cash flow generation. Hewlett-Packard generates about an 8% free cash flow yield, which is very attractive in a business with a great balance sheet. They've got great earnings power, and as they're turning this thing around, there's great opportunity for them. So it's not going to be a cloud-based computing company that's going to trade at 50 times earnings, but it's a type of company that investors are interested in right now. So I think Hewlett-Packard looks very attractive. There's no growth there. This is sort of a restructuring story. But the opportunity is if they could add some growth because the economy is getting a little better and companies are spending a little money on infrastructure, technology infrastructure, Hewlett-Packard could do very well.
Did you buy into this at any point?
We own a little bit of this. Mm-hmm. We have a big position in Microsoft, which is not exciting technology, but it's great balance sheet and great free cash flow.
Now here's one you've held before. Let's see if you're back into it. Dorothy's in Toronto. Hi there.
My question is on American Tower. I'm wondering, David, if you still feel that there's a big theme ongoing for demand for bandwidth and capacity, and there's a telecom spending in order to deliver that to clients. And
Right.
If that theme is still intact, where do you assess American Tower? I know it's been a little sluggish because they set themselves up as a REIT, but against their peers, they seem pretty solid.
Yeah.
So thanks. I appreciate your comments.
Great, Dorothy. So yeah, American Tower you look at against the REIT complex, and American Tower has very steady but strong dividend growth. Stock broke out of a base at $85 that had been in for about 18 months. We've bought the stock back. This is one of our larger holdings. I actually considered using it as a top pick tonight. When we originally bought this stock years ago, we were just about to go through the cycle of upgrade to 3G. Well, here we go to 4G. Mm-hmm. And so the way this business works is you've got towers, and the towers have tenants, the wireless companies, 2 to 3 tenants, say, per tower. And when you go from 3G to 4G technology, you don't take down the 3G stuff to put up 4G, you add more equipment to the tower. So it's like adding floors to your apartment building, you're getting more rent. And so American Tower probably will double its cash flow in the next 5 years. Dividend will grow very quickly. It's not a big yielder, but it's a quickly growing dividend. It's behaving very well versus the REITs. If you think that rates could stay lower longer than people expect, and we happen to believe that because of low inflation and slow growth, this could be very, very attractive. So I think that this is a good one for an investor who's looking for a little bit of yield and one with some dividend growth.
Well, there you are, Dorothy. Thanks for the call. We'll get back to more calls, emails, and tweets for David after this break.